This past Thursday, Newt Gingrich released his tax returns for 2010. A lot of people are talking about how much tax he paid on his income. However, not a lot of people are talking about the fact that he didn't pay as much tax as he should have on his income. Most of Mr. Gingrich's income came from the earnings of a wholly owned corporation called Gingrich Productions. It's something he works for, his wife works for. Virtually all of the money generated by that company is from their own personal labor. That company generated about $2.8 million in fees on their income in 2010. However, the company only paid the couple about $444,000 of it as a salary. By using this ploy, by only paying themselves a portion of what the company made, Mr. Gingrich was able to avoid having to pay a 2.9% Medicare tax on the balance. If you did the math, that comes out to a little over $69,000 that Mr. Gingrich and his wife was able to avoid paying in tax. Newt Gingrich is not the first presidential candidate to use this tax planning strategy to cut their tax bill. When John Edwards ran for president some years ago, it was revealed that in 1998 he utilized the same technique for cutting his taxes. It's just that in his case the numbers were larger. He had about $5 million in fees generated from representing clients in legal matters, and he only paid himself something about $360,000. So the difference was free of Medicare tax. Presidential candidates are not the only people who take advantage of this opportunity to cut their taxes. In fact, in a recent report produced by the General Accountability Office, it showed that in 2003 and 2004, roughly $24 billion went underreported as wages generated by individuals who were owner employees of S corporations. And if the 2.9% Medicare tax was paid on that, it comes out to a considerable sum of money that is not going to the federal government. The incentive to utilize this tax planning advice is going to increase very soon, because in 2013 that tax is going to increase for couples who earn over $250,000 in income. It's going to go from 2.9% to 3.8% under President Obama's healthcare reform legislation. So as big as the numbers are today, they are likely to increase. This tax reduction strategy has been around for years, and Congress is well aware of it. And in fact, in 2010, legislation was introduced to reduce the temptation and to reduce the opportunity for individuals to utilize it. However, that bill did not become law. In fact, that bill was a modest proposal that would have only reduced the opportunities for cutting your Medicare tax bill by a small portion. There are other more aggressive ideas that have been floating around for years, but Congress has failed to act. When a presidential candidate like Newt Gingrich or John Edwards has to reveal their tax returns, and it shows that they are employing a device like this to cut their taxes, it sheds light on some of the tax planning opportunities that are available to individuals. In this case, this is a tax planning opportunity that's available to anyone who really works for themselves. All they have to do is choose to organize their business as a corporation that is taxed as an S corporation for federal income tax purposes. The problem is this, you have to ask yourself whether that is fair. Whether that is fair to people who have to work for somebody else for a living. They don't get the opportunity to control how much tax they pay. Also, you have to ask yourself this. Even for those people who do work for themselves, many of them don't have skilled tax advisors letting them know that this tax planning opportunity exists. That's unfair too. This is clearly an area that Congress needs to address, and the sooner they do so, the more fair the tax system will be for all of us.